Welcome to TradeTheNBI.com. This is Jonas Reporters for the 5th of September. And, well, we finally got a little breach of the ABM yellow and closed down at the lows. Now, we've been seeing this weakness from when we started the, we had the snake open right here as the green started to dip. And that took place right there at that magenta candle you see. And actually, prices held up fairly well within what has clearly been weak readings. The reality was, though, you had a nice reset of the steel. Didn't dip all the way to below the negative 13.5, which meant that short-term buyers really popped back into it early on. They just kind of went flat here right as we developed a DOC spread with the cyan popping, and that gave us a bit more weakness. And here we're seeing it extended as the cyan continues to rise, though we're starting to see now orange fading a little bit. Still haven't seen new buyers emerge from what should be new fund money popping into the market right about now. So we'll see if they start to buy up any of the weakness. That should be a clear indication as to whether or not they're really interested in catching up, or whether they want to try and sell this back down a little bit to make up for the fact that most of August was missed by a lot of people who are on holiday or whatever, and they want to mean revert that first before and then try and buy up at a discount. Plus, you do have issues, like I said, this beginning of the political season starting in September, as well as some of the emerging market risks that are existing out there. And so there's a lot of little things that are going on. Valuations are still up there. So even a pullback within this broader range is still leaving things quite healthy. We can see from the NQ standpoint a little bit more dramatic, and you can see a little bit better improvement from at least an attempt at closing the mouth here. And if orange dips below cyan in this particular case, you'd have an end to a significant downward pressure pretty quickly. When we look at the euro fading right back, it's right at the precipice of the top of the range, and that becomes key because this is really, it helps float the S&P, and so a dip back inside of that would be a little bit more difficult, because then you stop getting the bonus from the exchange rate, and that does affect it. Obviously, it's always been an interesting one to me. The flight to quality has caused treasuries to be a bit more elevated than they should. Of course, we still have a 113 target down on the bottom side, particularly if rates start to rise. So the question really is going to become, is the Fed going to pause? May be the case. It really is going to be difficult for the government, particularly with its spending, because even the smallest increase in rates really compounds the deficit. Like we were mentioning the other day, that if you didn't have these rate increases that have taken place since Trump got elected, you wouldn't even have a deficit, interestingly enough. So go figure. In this particular case with oil, we're pushing up towards the highs here. This is going to be also a drag on the market. And again, I've talked about this being the alternative gold trade temporarily. It's not about supplier disruption or anything. It's just about using it as an inflationary hedge. And as we see prices elevated, it only adds to that because you're getting zero traction with gold. Even though now we finally have an improvement from the shakeout standpoint, first time in a while. But this is something I was talking about in the chat, that when you get a minus 29 here from the blue readings, we don't talk about that much on the shakeout. What that suggests is when you get pops and rises, until this improves and gets towards that negative 13.5 range, it's hard to sustain any kind of rally. It just doesn't work out. And that's a critical feature, because if commodities aren't taking off and that, people aren't really feeling the risk, which means we're sort of at a ho-hum, things are going pretty decent category. But that doesn't mean that we're not going to have broader ranges now that the market has moved so much. So if we look at what happened during the day, it was pretty exciting here. We had talked about this sell signal that came in, and what was formerly the white candles that have now colored and the orange popped in, which meant we were looking for a revisit of the low, simply because we had the dip below the red line from the extreme. Sure enough, hit that, made new lows, which correspondingly produced a decent buy on the second run. The first one didn't have the orange dip below red, but once we got over here, and that happened to be right at the 23%, which is usually a pretty decent range. And we got gold right at the 50% mark. Tough one right there, but it produced kind of weak readings at that particular point, and then finally we ended up with this little conversion here, which was a little early. Kind of a bummer on that one, because you're sort of like, okay, it's the opening in the mouth, but I still have green above red, and I don't have red falling. Finally get that transition there as it began to cascade lower, and then it posted about this as well. It's like you're coming down. This first one looks attractive, but you're likely to retouch those lows, and that was the second one, much more attractive from an extreme reading as well as there, and that led to a pretty decent pop at that particular point. That brought us all the way up to the pre-market, which was right over here. We had gold above 50, which led us to the highs, obviously, there. And then again, this spike right here for a short configuration. And then it continued to expand itself with the DOC spread at that particular point. And that's led to, well, the retouching of these lows. And actually, we just made a new low minutes ago. So, all in all, we're getting pretty good range movement up and down, despite the fact that, I saw some stuff that was claiming that, August was pretty calm and dry. Maybe dry in the sense of still moving up, but the intraday ranges are still fairly decent. I mean, this is more than tradable range, and you can get pretty decent points out of it, so can't complain about that. We see orange working its way down here. Didn't get a reset of steel in any case, so even if it does get a pop, it's not likely to last. And this is something I was talking about too. It's like when you get these dips of the blue, which was an added thing that I put on the Skype chat in kind of a detailed thing, it sort of lets you know that you've got problems in any rally, because it's not likely to sustain itself. Usually those fully retrace themselves unless it gets back above that 13.5, in this case, breaking below it. And again, I was pointing out specifically, like on this one back here on the far left of the chart, when you get towards that 0 point with the red and it fails, when you do have an opening of the mouth at that point, you don't necessarily have to have the green crossing over, which is why I pointed that one out particularly. And I mentioned it as this one was happening right here, because I could see that we were starting to flatten out right as we get to that 0 point. And that becomes a key threshold, because it means it can't overwhelm the general strength of shorting. And sure enough, that's produced really nice down moves. Likewise, similar thing happened right here. We get right up towards the 0 with the red. And actually, I can increase the size of this so you can see a little better. Let's zoom in. I'll make it clearer for you to see it on the screen. So you can see coming straight up to it, got really close, and then boom, tips down. And as soon as it tipped down, it's an opportunity. Yep, sure, it went against you. You're thinking, oh my God, I'm in trouble. But no, it didn't take long for that to just completely retrace. This is where sometimes you have to have patience within that setup. So as we look to the current setup right here, as we're broaching the lows, fine, we're getting to a possible bounce point, but doesn't look sustainable just yet. So at that particular point, we're going to continue lower. I think I'm still in that one from, where was that? Right around the 99 range, which was right up here. I took the ABM range. I think the ABM was just below that. It was like 97 something. Yeah, 97 and a quarter. So took advantage of the little pop when it came through. So all in all, good stuff. No complaints. We'll keep after it, and I'll post on Skype chat any relevant setups as they come about. Trade well.